And leave it to contrarian badass Reggie Middleton.
Reggie walks in looking really cool. He's got a Google Glass on, and I'm like, man, that's cool. And
did he walk
what did
like
you?
that?
Yeah, he walked like that. That's how you walk if you've got Google
like
Glass
that?
on. Everyone
Really?
walks real cool.
Nuts.
He called the housing crash. He called the collapse of Bear Stearns and Lehman Brothers. He's been harping on the crisis in the Eurozone banking system for years now, so he's just the guy to talk to.
Reggie Middleton.
Reggie Middleton.
Reggie Middleton.
Oh, he doesn't mince his words. We're talking about Reggie Middleton.
Ooh, it's Reggie Middleton.
Greetings, everybody. This is Reggie Middleton. I got a very, very fruitful outpour with my indications of interest in terms of investing in Veritasium. Thank you all. I definitely appreciate it. These came from people who didn't just, see the call out, but they've been following me for years, some as far back as 2007, almost 10 years. It brings back memories of Boom Bust blog days. I would like for all to keep in mind that the call is going out to accredited investors, but you don't have to be an accredited investor. It's just a lot safer for us that way. But if you are a friend or family, or if you followed me for a very long time and we've had interaction and you know what's going on, please, by all means, come on up. Okay, on that note, I say this because Veritasium is a very risky venture. We are taking brand new bleeding edge technology that was just invented a few years ago. We are taking a brand new business model, peer-to-peer capital markets, and we are attempting to disintermediate the most powerful business and the most powerful lobby in the world. And it's been so for over 100 years. That's the finance and banking industry. So, needless to say, that's a tall order and is very risky. Do not even consider investing money that you cannot afford to take a total loss on. That is me being honest and asking you to be prudent. Now, on that note, you see how I could come out and say that. The Bloomberg article that was quoting John Cryan, the CEO of Deutsche Bank, it keeps, it's just something in my head going knock, knock, knock. I just can't shake it because he was saying that there are forces, again, paraphrasing, not quoting, forces in the world that are trying to undermine the trust in Deutsche Bank. Now, Deutsche Bank's problems primarily come from Deutsche Bank's management and or mismanagement of his business, number one, okay? And, the forces in the capital markets, macro effects, etc. But, the Deutsche Bank CEO and many of the Deutsche Bank's fellow banks analysts have said that the risks to Deutsche Bank are overblown. No, that's not true at all. If anything, the risk to Deutsche Bank is significantly understated. Going back to the example that I gave in the last video or video before last about Deutsche Bank, you are getting 5 basis points of income, okay, unsecured, for taking the risk of investing in a bank that has, woes and maladies all over the place. Significant malaise. The Deutsche Bank, the Department of Justice, $14 billion fine, which there's a rumor that they're looking to settle somewhere around 8.6 billion. Or 5.6 billion. It doesn't really matter. Anything over 4 billion and change means Deutsche Bank has to raise capital, come up with more money. They've only reserved about 4.6 or 4.7 billion. They have a whole list, a laundry list of other suits, which I will actually list in this video for you. Okay, to put this in a perspective, the European banking system in general is a mess. Okay, the negative interest rate policy of the ECB has destroyed the fundamentals of the banking system. I wrote several articles on this. I'll actually flash a few on the video. Those who are not familiar with it need to go to Veritasium.com, go to the blog section, and look up the negative interest rate policy. Just do a search for it. So you have negative interest rates, pushing interest rates down, negative interest rate policy. They're negative, they're zero, just above zero. Banks are paying measly pennies on the risk that you're taking to invest in them. And yes, if you're a bank depositor, you're an investor, you're an unsecured investor. Don't think of it as savings because it's not your money. You're giving it to the bank as an investment, taking risks the bank is promising you a return. Okay? Now, with that in mind, Deutsche Bank is paying 0.05%. The EU, Germany, is in the EU, in continental Europe. It is a bail-in country, a bail-in state. Which means that if the bank comes to a bankruptcy or is at risk of a bankruptcy, an insolvency or liquidation proceeding, or comes too close to such, which it looks like, is flirting with something right now, the bank and the government has the right, and it is now legal for them to confiscate the cash, which was not yours to begin with, right? It belonged to the bank, and give out equity-linked notes, or some type of IOU, whether it's debt or equity base, in exchange for the money that was supposed to be given to you upon demand, which is why they call them demand accounts. That's significant risk. Now, there's an insurance scheme in Europe, and the cap is 100,000 euros. So anything over 100,000 euros is at risk of being basically taken, confiscated, or exchanged involuntarily for equity or equity-linked notes. I say involuntarily because, that's really a misnomer. There's a bail-in scheme, right? There's a bail-in law. Deutsche Bank and other banks may be in trouble. They have significant issues: balance sheets, derivative risk exposure, rotten assets on the balance sheets, overexposed to mortgages, high LTVs, bubbleistic real estate, etc. This. So the bank is over. The bank has significant derivative exposure, leverage, fundamental issues. The macro environment's against it. There's a lot of regulation pushing capital requirements up. There's a lot of litigation going on. Reggie has told you. Okay, knowing all this, you still put the money in, right? Knowing that Moody's has downgraded their standalone baseline credit to junk. That all the other credit standings have been downgraded, likely with a negative outlook. All this, that you still give your money to Deutsche Bank for 5 basis points. That is 0.05 of 1%. That's the compensation you're getting for the risk. Now, to contrast this, I'm going to overlay a spreadsheet that I just drew up early this morning on top of this video. You have the risk-free rate. I'm going to mix and match currencies and interest rates because my audience is primarily American, but Europeans, pay attention, okay? You swap it with the Bundesbank rate if you wish, the Bund rate, and you go swap the dollars with euros. So you have the risk-free rate, let's say 5 years, the 5-year treasury, it's on this overlay. Let's say 1.62% roughly, or 1.12%. Okay, the U.S. Treasury rate is as risk-free as you can get, because it's not as if the United States is totally risk-free. Okay, of course the risks abound, but we control the printing press and we are the reserve currency. So we will not default on our bonds. We will simply print more money and pay you with that devalued money. So from a nominal perspective, you will probably never be defaulted upon. Deutsche Bank can't do that. Okay, so you have a spread. The risk-free rate, 1 point whatever percent, is in the spreadsheet, right? Minus the potential risk you could take, or you will be exposed to by putting your money in Deutsche Bank and having Deutsche Bank potentially bailing your money. Above and beyond the 100,000 euro insurance scheme. That's like the FDIC bank deposit insurance. Okay, so you put $250,000 in, Deutsche Bank goes bust, you're protected up to 100,000. Everything over 100,000 gets taken and recapitalized Deutsche Bank. Against your will, sort of, not really, because you knew it could have happened. If you're watching this video, you know it could have happened. So the cumulative, the compounded annual growth rate from 250,000 minus the 150,000 that would have been confiscated, plus the 100,000, which would have been the bank insurance, leaves negative what, 9.83 something percent. Okay, that's the spread between the risk-free rate, U.S. Treasury rate, and the compounded annual growth rate of your bank account minus your recapitalization forcibly to Deutsche Bank. That number is what Deutsche Bank should be paying you, or better yet, Deutsche Bank should pay you as close to zero as possible. They're a for-profit entity. Their job is to look after their shareholders, not their depositors. Keep that in mind. But as a depositor, looking out for your own best interests, okay, you should be expecting a minimum of 9.83, roughly 10% from Deutsche Bank as an interest rate to compensate you for the risk you're taking putting your money in Deutsche Bank. 9.83% roughly, 0.05 of 1%. Big difference. Now, why is it the CEO of Deutsche Bank disclaiming this risk and warning the depositors who are also his investors or potential investors, just like I did in the beginning of this video when I warned everybody, Veritasium is a very high risk, very high reward scenario. Okay, Deutsche Bank is lower risk. How much lower? That's debatable, right? Much lower return as well. If you're going to subject yourself to a large amount of risk, you should expect a significant return. You know, Veritasium has significant risk, but there's a chance, I won't say strong, there's a chance you could truly knock it out of the box, multiples and multiples of returns. Okay? Those returns not only expected, they should be demanded by any prudent investor because of the risk you're taking. Deutsche Bank depositors, get with the program. Any bank depositors, get with the program. The problem is the ECB has made it almost impossible for banks to compensate the depositors for the risk that they're taking. A lot of European banks are messed up. Look at our research. Subscribe to our research at Veritasium.com. I've listed several of them. One of them, counterparty of Deutsche Bank, everybody's acting like there's nothing wrong, with many indicators pointing to many things wrong. Okay? Almost zero compensation for significant risk. The ECB has made it impossible for you to get paid for the risk that you're taking. So, should we play in Deutsche Bank? Well, Deutsche Bank can pay more if they wish. They choose not to. Okay, it'd probably drive them further in the hole. But if the CEO would do the right thing, he should warn him. Simple math, arithmetic. I'm signing out. Again, anybody interested in investing in Veritasium, if you're an accredited investor, please reach out to info@veritasium.com. Okay, if you're not an accredited investor, but we have some history, or you feel there's a reason you should be able to invest and understand the risks, I'll talk to you. Info@veritasium.com. Peace.